Today we are going to learn how to use stockanalysis.com website for smart share decision making, whether you are buying or selling. And we'll learn how to make decisions for dividend stocks and also for capital gains, and learn how to use this site in a professional way. And remember, you can watch live and recorded trainings on my YouTube channel, my website KE, the Jumpstart Third Studio. My name is Peter Chega. That's my WhatsApp number. In case you have any issue, you can always reach out. So what is stockanalysis.com? It is a free and simple tool. That is a website that lists all the shares, both global and also in NSE. And provides both real-time and delayed data. For NSE, it is delayed 15 minutes. You can also use it to check current prices. That is the current share trading price, but with a 15 minutes delay. Then 52-week high and 52-week low. So that means the highest the share have ever gone for the last 1 year, and the lowest it has ever gone for the last 1 year. You can also view dividend details, among other details, as you will see. So this helps you see which shares are cheap and which ones are expensive, so that you make decision whether you are buying for capital gains for the cheap ones. For the expensive ones, unfortunately, you may be buying only for dividend, because upside of those shares is very little. Upside means chances of the prices are going up. So then how do you check share prices on 52-week range? First of all, when you log in, you open stockanalysis.com, you search for the share that you want. Then you go to prices. There you'll be able to see the latest NSE trading price. And as I said, it's 15 minutes delay. Then you can also see 52-week high and 52-week low. That is the highest and the lowest the counter have ever gone in the last 12 months. You can also see how it has performed since it was listed, the maximum it has ever gone. So that helps you make decisions on whether the share is cheap or it's expensive. So this will show how prices have moved over time and whether it is currently near its highest. That means it's expensive, or its lowest. That means it is cheaper. So let's go to stockanalysis.com. Let me stop sharing. So this is the site, stockanalysis.com. I'll leave a link in the description of the video. So when you first log in, because I've used, that's why it went to that screen. You might load on this screen. The first thing you may want to do, even if the site is free, is to sign up. Just click on sign up. There are three packages. One is free, where you can see just limited data, but it is enough to make decisions. However, you can go to Pro, where you have unlimited, and you can see longer history, dividend history. This is what we want if you are a dividend stock investor. Also, you may want to see financial history and a bit of detailed analysis if you are technical or capital gains investor. And there is also unlimited, where you choose the plan. For me, I usually go with free. For a start, just go with free. Then you click continue with Google. Then you sign up with Google. For me, I already have an account. So I click login. Then I just click login. So I'm logging in. So when you're logged in as a user, now you have access to some tools that we'll see later. So if you want to see NSE stocks, you just go to where they search. You just type the company you want to view, like Eskom, Safaricom. It will be listed. Notice NSE, that is Nairobi Securities Exchange. So the first part is the exchange, then the second part is the share and the share name. So once you click, you get the details. Like now you have the details of Safaricom. As I said, you can see from 1 month, year to date, that is January to date. 1 year, that is 52 weeks. From last year's November to this year November. You have 5 years and you have months. You can see, you can view those price details. If I click on Kenya, I'm able now to see all stocks that are listed at NSE. If I click overview, I'm able to see the stock price. This is the one I'm saying it is delayed with 15 minutes, and you can arrange to see the shares that are expensive and those ones that are cheap. These are for the penny stocks. So if you want to know penny stocks that are trading in NSE, it's any share trading below 15. APOC is also a penny stock, only that it started giving dividend. Most of these are penny stocks. You can see performance. You can see dividend details, but these are limited to current to the latest dividend. If you want to see dividend history, then you may need to have a pro account. Then you have the prices. As I said, stock price, 50-week low, 50-week high. We'll come to that. Let's go back to our presentation. So then how can you use stockanalysis.com to make buy decisions? It is using the 52-week range, the high and low. So when the stock is trading closer to its 52-week low, it means it's already undervalued. The buy price is at its lowest. This gives you a potential buying opportunity. But again, you need to understand why the price have gone down. And that translates into capital gains, where you can buy low and sell high. When the share is at its 52-week high, then it means it was overvalued, or maybe due to profit taking. Investors are selling, and that have pushed the prices up. So that share may only be best for dividend. Since if you are to buy, then the chances of it going higher may be limited. So you could only be buying that share for dividend. When you use DCA, that is dollar cost averaging, to average your cost down. So when the share goes down next time, you buy a lot of shares. So before making those decisions with 52-week high and 52-week low, you need to make additional research. You check news to consider why the share is undervalued or overvalued. You also check its earnings. Maybe the price was pushed by its earnings, which means potential dividend announcement is high. And finally, you cross check whether it is a dividend announcement before buying, because then you may buy and maybe it's a one-off dividend, like what happened with Umeme when the share collapses. So then checking dividend yield and payments. So you go to the tab for dividend. Here, there you can see dividend yield, how much income you earn yearly compared to the current price. And then whether it is annual, semi-annual, just to know how frequent you'll be getting dividend. And also the dividend that is listed there should be annual. So it's the total dividend for that year. Then there is a ex-dividend date. That is the date 1 day after book closure. And then the payment day is the date that you'll be paid. That is, if you have the pro account, you'll be able to see all these, including book closure data, the date you need to have shares. So mostly you compare current yield with previous year's yield to help you save the stock offers good value and whether dividend are increasing. So let's go back to stockanalysis.com. So again, under price. So we are still under all stocks under price. Let's see how to make decisions using 52-week rule. So if you're to arrange with 52-week rule, you see the shares, the prices for the last 1 year. So you compare the 52-week rule with the current price. Fortunately, this is already done for you. You just click on the percentage, 50-week 52-week low change. So like Simia, it has already gone up. If you are to look at the change, the percentage is very high. Even KPLC have moved from its 52-week low. It's at its highest. So these are shares you would want to buy purely for dividend if they are announcing dividends. If they are not announcing dividend, then it's always good that you avoid them if you are looking for capital growth. If these shares are not giving dividend, then there is no chances of you making money. So like for KPLC, Kenyan, they have already announced dividend. The rest, most of them, they are penny stocks. DTB, that's also another good stock. NCBA, Capturwa, Safaricom. So even if these shares, their prices are high, then you would want to consider them for dividend, because the chances of those shares going up may be limited. If we arrange now the other way from the lowest, these are stocks you may want to consider for capital growth. The chances of prices going up are high. But again, you also need to consider which stock is it. Like Umeme, it's not a stock you'd want to get into. The price have gone way low. Maybe Kakuzi, but you see its price is also a bit high. The spread between the lowest and the highest and the current price is minimal. There are BAT, again the same thing. Stanchart, these are stable stock. If you notice, apart from Stanchart, BAT, Kakuzi, the price difference between the lowest and the highest is a bit minimal. And that allows you to play around with this stock. But these are also stocks that move very heavily in terms of price. So 50-week row, 52-week row can help you gauge that. The shares that are closest to the 52-week row, those are the ones you want to consider. Then again, 52-week high, again, you also want to consider that. Is the share closest to its highest price ever? Again, you can arrange that. You notice again, some of these stock are closest to the highest they have ever gone. Again, those stocks, you may want to consider them purely for dividend. Those that have gone down, again, you'd want to consider, is it a good stock or is it a penny stock? If it is a penny stock that is not issuing dividend, you may want to see now how it has performed over time, whether there have been price spikes, because those are opportunities for buy decisions. But again, remember, if this share is not giving you dividend, the only chances of you making money is through capital gains. So you use 52-week row, you check those that are at their lowest, then 52-week high, the ones which the gap is wide are the ones you'd want to consider. So from the list of both, now you look which is common in the two lists. Then from there, you just check news, earnings, and also profitability, and whether they have been giving dividend. Those are shares that you can buy both for dividend and capital growth. The ones which are not giving dividend, you may want to see, are those shares performing well? Even if they are not giving dividend, are they performing well? They could be reinvesting the profit. So in terms of dividend, you go to dividend tab. Here you have dividend amount, you have dividend yield and dividend growth. Ex-dividend date, because that you only need when they announce, even book closure. Then you want to see payout ratio and payout frequency. So for dividend, you check the amount. Maybe you are considering about the amount that you want to receive. You can reach to see which gives high dividend and the lowest. But the most important is the dividend yield. But remember, dividend yield is also affected by price. That's why you need to also see the price movement. If it's the share is at its highest, then it means the dividend yield is also affected by the price. That is the return on your investment. You'll see how you determine dividend yield. So You want to get the shares that are giving high yield. So like Stanchart, BAT, Stanley. Umeme just strike it off. That I don't think they'll be giving any dividend soon. So that's how you knock out the stocks. Then you want to see shares which have been growing in terms of dividend. So you arrange with the dividend growth. KCB have been growing, Liberty, NSE, Stanchart, Stanbic. So you want to list the stocks in terms of dividend yield, then dividend growth, and also payout ratio. Payout ratio means how much are they paying out of their profit. Those that are paying more, like BAT, BOC, Capital, it means they are not reinvesting their dividend. They are giving out most of their dividend. So those are purely dividend stocks. The ones which are giving low dividends, it means they are reinvesting their dividend back for growth, but giving portion to their investor. So you may want to see again why they are giving low dividends and reinvesting much of their dividend back. So this helps you, one, through dividend yield, check the shares which are giving high yield, but remember, yield is also affected by the price. So the next thing is to check dividend growth. Is their dividend growing over time? You don't want shares that have negative dividend growth, because then that may tell in future that dividend may be suspended. You may want to know why the dividend have gone down. Like for Williamson and Williamson, it's because of that split they did. Instead of giving much of their dividend out, they gave in form of bonus shares. Then payout ratio, how much are they paying out of their profit? If they are paying more, then that is purely dividend stock. You may want to check further. Are they doing any innovations? Otherwise, they may be giving dividend maybe out of sale of an asset. So you want to get details of where they are getting money to pay that dividend. So let's go back to presentation. Now let's understand dividend yield. Dividend yield is calculated in two ways. It depends whether you have shares or you don't have. If you don't have shares, dividend yield now it's the annual dividend divided by current price times 100. So if dividend is 4 shillings annual and price is 10, so it's 4 over 10 times 100. That's how you get the dividend yield for shares you don't have. If you are buying new shares, because it is the amount that you use to buy shares. You are trying to compare with dividend. What is a return? If you have shares, then it is the annual dividend divided by your average cost. This you can always get from your portfolio valuation, because you want to see the dividend that you are getting out of what you have incurred. Are you getting value for your money? That helps you make two decisions. Whether you want to retain that share as a dividend, you take the dividend that's coming, or you take capital gains. So again, you compare the current price and the average cost divided by the average cost times 100 to see if you get value for your money by selling. So you are comparing dividend yield against capital gains. So again, current price minus average cost, average price over average price times 100. So that gives you capital gains percentage, so that you compare with the dividend yield, which you calculate annual dividend over the average price times 100. We do that in the next video, so that you are able now to make the decision: do I sell or do I hold for dividend? That is mostly on book closure, because that time prices are high. You want to know, if I sell, is it easier to sell and get money, or is it easier to wait for dividend? So when price goes up, as I said, yield drops down because it's affected by the price. Like most of the stocks right now prices are high. So you find dividend yield is low. That does not mean you are losing, because in future again, that share will be giving dividend. You only need to compare now with the average cost. As I've explained, when price goes down, the yield rises. So when the price falls, that's when you want to buy so that you lock a higher income yield. I see most people buying at the end of close to book closure. That time you are dividend yield people, because prices have gone up. So if you are targeting dividend stocks, I've given that list previously. I will also leave the link to my blog where you can get that list and a dividend calculator. You want to buy those stocks early before prices go up. Immediately dividend is announced, remember the price will start shooting up because demand is higher than supply. That is purely what drives the market, demand and supply. So if a dividend is announced, you find people want to buy. So demand is higher than supply. That pushes the prices up. The meaning dividend yield drops. But remember, if you already have shares early, you're not comparing now the price, current price. You are comparing with your average cost. We'll see in the next video. So why you need to know your average price? As I've explained, average buying price, which is in your portfolio valuation, that is the average cost you have incurred to buy a single share, determines your true dividend yield. Remember, if you are using current price, you have not bought, that is an estimation. If you already have shares and you have your portfolio valuation, go to average price for the share that has announced dividend. You take that average price and make sure it's the correct one. If it's not the correct one, ask the broker to correct for you. So that helps you make two decisions, as I said. Whether to retain that share and collect dividend, or at book closure, you sell to realize capital gains. Why? You're dividing dividend against average cost times 100, the dividend yield. You have the current price minus the average price over the average price times 100 to get capital gains percentage. So you compare that to the dividend yield against capital gains. You decide which one do I take. If capital gains is more than a half, 50%, you don't want to take capital gains. If dividend is higher, then you don't take dividend. So that's why tracking average price is very important. It helps you measure the real portfolio growth and also your income returns. Remember, these dividends are paid continuously by some of stocks. So you do want to track that dividend yield every year. And if possible, you can track the total dividend you have received, the total dividend yield. We'll come to that in the next video so that you know whether you have been getting value for your investment, not just tracking the current movement. Fortunately, capital gains percentage is calculated for you in the portfolio valuation by most of the brokers. You only need to check profit percentage. So you are comparing that profit percentage with dividend yield. So then you have seen how you can use stock analysis for dividend and also capital gains. Dividend using the dividend tab and capital gains using the pricing, 52-week low, 52-week high. So then how can you use stock analysis for portfolio review? Just a recap, you identify cheap stocks. Those near 52-week low, those are potential buy zones, but you need now to go ahead and do some analysis to see why have the price gone down. Then spotting overpriced shares, those ones that are near 52-week high, you may want to take profit by selling. If you have been investing for capital gains, also tracking dividend consistency. so that you focus on reliable income stocks that are giving you dividend continuously. Then you want to compare your average cost against the current price to know if your portfolio is gaining in value. We are coming to that. For those who have been investing with multiple brokers, you don't need Excel these days now to track your portfolio. You can use stockanalysis.com if you have registered. Then it also helps you reinvest dividend by tracking the high dividend yields and also dividend growth. And also topping up when price dips. When prices go down, they are closest to 2 weeks low. That's the time you need to deposit money and buy a lot of shares. Then, if you have been buying shares at the highest price, that will help you in dollar cost averaging, meaning pushing the average cost down. So, which was then your average and boosts future returns. That's how we play the market. When prices are low, you buy a lot of shares. When prices are high, you buy small shares. That's the time now you diversify across different dividend stocks. You buy in small lots. When prices are low and dividend have been announced, you put that money in that stock. So let's see how you can do portfolio analysis with stockanalysis.com. Let me stop sharing. Let me share this screen, and this is a recorded version. So you go to stockanalysis.com. When you are in this screen, you go to watch list. This is where you can create stocks to watch. Like, let me just remove this, edit these two, just remove them. So when you open it is blank. I may want to, let's say I have Safaricom shares. I can just come and type Safaricom. Safaricom. It will give me the share. It's here. You just select it is added. So here I'm able to track the prices and financials. That is fundamentals. Let's start with the general. This is where you can see the price, the volume that I've traded, and other issues which you may be interested in. And in the pro version, you're able to see additional details, which I don't want to go into details right now. Then you have holdings. This is where now you add the portfolio valuation you have. So Safaricom, the current price, then you can add the number of shares you have. Let's say I have shares 1,000 with one broker. Then the average cost from portfolio valuation, let's say it's 24. I'm able to see the profit I've with just that. And these I can add notes, maybe if I have multiple brokers, remember I can't add another Safaricom. If I add Escom, I try to add another one, it won't add because it is already added. If I have multiple brokers, this is where you need to do mathematics. So you take the number of shares you have with the current broker and the average price to get the total valuation. That you don't need to do, it is there in the portfolio valuation. You go to the other broker again, take the total valuation in the number of shares. So you add the total valuation for the both and the total number of shares. Then you divide the total valuation you have over the total shares. You get the average cost. Let's say I've done that mathematics and maybe I have 1,000 shares. In my average cost, maybe it's 21. I'm able to track both brokers' portfolio valuation using stock analysis without me selling or transferring. I'm only doing the averaging, then I come and put the average cost and the total share. If I buy in one share broker or sell in one broker, I only come and adjust shares owned, average cost, average price, and it calculates everything for me, giving even portfolio valuation and P&L, whether I'm making profit or loss. So that helps you make two decisions. One, am I buying this? Am I holding my stocks for value? Remember, if you have two brokers, it's like you'll be valuing your shares differently, yet it is the same investment. Instead of transferring, you can always report for broker. It is the same CDSE number but shared across the brokers. If you go to CDSE, they're able to give you the broker and the shares. If you go to those brokers, they're able now to give you portfolio valuation. So here maybe I can come and make a note, AIBN, the other broker, and save that. Remember, I have an option here to download if I upgrade for Pro. You can download as Excel or CSV for my future reference. You can also, if you want to enable currency, you can enable so that here you value, if you are outside the country, you can value your stocks in your country's currency. So I don't want to do that because I'm in the default Kenyan currency. So again, you can also, using Pro feature, you can upload. So you can do calculations on Excel. If you have an account with another broker, so you export Excel, the other Excel, you come and do averaging the total shares, you come and upload that. It will add details for you on the chart. And you can also be tracking now dividends on these shares you own. Here you're not tracking the whole market. You are tracking the stocks you have added to watch list. You can be able to see when they are announcing dividend, when is ex-dividend data. So you need to have shares one day before. It's called book closure. You can see even the dividend growth, dividend yield, and other details related to to dividend. And it also tells you your shareholding yield and payout ratio. Then you can also track performance. Again, you may want to see how the share performed over time, how your shares that you own or the shares you add to watch list, because you can add even those you don't have. Yeah, you can also add those you want to track. It's only in other holdings where now you add, for the stocks you own, you add the shares and the average price. You can also see forecast if there is any analyst rating. For NSE, I've not seen any. Maybe at the Pro account, they could be. Then you can also see the earnings for the shares that you own, so that you know whether you have invested in companies that are growing, and also fundamentals. Remember in the previous training, we said you want to invest in shares that have free cash flow, because that's what they used to pay dividend. So if you notice most of your stocks are in negative free cash flow, there are chances that that dividend may be supported by debt, or in future it might be stopped. You want to get out of those stocks, especially where the free cash flow growth is actually declining. So that's how you use stock analysis for portfolio review, but I'll come and do a detailed tutorial on portfolio review using stock analysis. And I'll be doing live training for the same. I'll be doing live training stock analysis on what we have done. That is checking prices, 52-week high and low, to know whether shares are cheap or expensive. Tracking dividend yield to measure true returns, both for the portfolio you own, for the shares you are getting into, if you are buying new, or if you want to add shares, the returns you get. So for the people who are buying new shares, you use the average price and the share, then the share you want to buy, and the current price. Again, you get the average price. The same way we have done if you are with another broker, so you get the average cost. So the current share times the average price that you already have, because you have portfolio valuation. Then the shares you want to buy times the current price, you get the valuation for the new shares. You add the two, divide by the total number of shares. That's the shares you have, and then new ones you want to buy. you will get the average cost. Then you can divide the dividend with that times 100 to get the average. So dividend yield depends on whether you have shares. That one you use average cost in the portfolio valuation. Whether you are new, you're buying new shares, you use current price. Whether you have shares and you want to add more, so you use both average price and current price to get the dividend yield. Hope that is clear. So that's where our average price comes in, which helps you now understand the performance of stock both in terms of dividend growth and also capital growth. So the secret in NSE is buying when value is high, that is yield is high, and also your returns, profit or capital gains are high, and prices are low. That is if you have shares. If you don't have shares, then you want to buy shares that are giving high returns in terms of dividend, shares that have past performance, capital growth, and also prices are near 52 is low. If you already have shares, then you compare the two even before you buy. You want to average your cost down. So if your average cost is still high, you don't want to buy a lot of shares. You want to buy a few shares unless you're targeting dividend purely. So with consistent buying during dips when prices are low and investing those dividends, you can build a strong long-term wealth tendency. So let's see how to determine whether NSE share is a dividend or capital gains. So there are simple ways that you can use to determine whether share is a dividend stock, that is income, fee income because you are receiving money without selling, or capital gains, raise growth, and you sell when you make money. So one is checking the dividend history. We have seen, you can check that through stockanalysis.com. You can also check through NSE website, price list, and also my blog on the dividend history. So you want to buy for good dividend stocks, you want to buy shares that consistently pay dividend year after year. You don't want those who pay once, because that dividend could be maybe an asset that was sold. For capital gains stocks, you want to check on the price, the shares that are low in price, and also those which have irregular dividend. Maybe they give once, the next time. Because then, if they are giving dividend because of a sale, a single sale, it means that the price will spike. That time you may want to sell. If you want to buy when prices are low, you sell high. And most of penny stocks, they don't give dividends, so you may want to buy them for capital gains. So don't just buy share because it's there or it is cheap. Like I've seen people buying Uchumi. Uchumi closed its shops. I think if they are lucky, they could be having one shop. So why would you buy that stock? Because you'll be trading at a by regulation. As long as stock is not suspended or delisted, it will still continue trading. Why would you want to get into those stocks? So we'll come to another training for penny stocks. So stick around this channel. Remember to subscribe, share with your friends so that they also learn how penny stocks trade. Don't just buy because it is cheap. You'll be stuck with a share that maybe you can't sell or that you can sell at all. So capital growth shares you don't like for dividend. You want to bet with the price. Then you check the sector the stock is, whether that sector is stable and dividend friendly. There are sectors that have been giving good dividend, like banking stocks. It's only HFs, okay, also finance which don't give dividend. Telecoms, Safaricom, both dividend stock and growth stock. Because they invest much of their profit for growth, but also give dividend. And the manufacturing, because you have VAT, EABR. Insurance sector, Jubilee, CIC, Britam stopped giving dividend. Maybe they might resume in near future. And energy, we have Kenyan and KPLC. Then capital gains, you may want to get into shares for speculative purposes, maybe small caps and penny stocks. We'll come to these in details next time so that you understand which shares you don't want to buy at NSE and which ones you can speculate with. Then the other thing is to check dividend yield. You want to buy shares that have strongest dividend yield, 5% and above. May give you good returns, but that does not mean those below 5% are not good dividend stocks. It all depends as you as an investor. Then for capital gains, you may want to look at the stocks which have a lower yield. But remember, yield is also affected by pricing. Right now, yield is low because prices have gone up and dividend have not improved. So these may not apply currently. But when prices were low, this is something you needed to check. For capital gains investors, you look for low or zero dividend, but shares that are rising in earnings. Well, that means share price may go up. Shares that are increasing in sales, even if they are not giving dividend, and those that are expanding, because it means they are investing their profits, and chances of prices going up is high. As I said, Safaricom is both dividend and a growth stock because it leans more towards they give dividend, but also expand. They use more of their profit to expand. Then you may also want to see payout ratio. I think I went earlier in this video. It's how much of the profit being paid out as dividend. If a counter is paying between 30 and 70%, that's a healthy dividend company. It's not struggling to pay its dividend. Anything above 80%, that unless it is a stock that is not expanding, like in agriculture, you may want to question why. Maybe in future, dividend will be cut. Look at Umeme. The dividend, their payout ratio was high. It means they may not give dividend in near future. Anything below 30%, that's a growth stock because they prefer investing their profit. So you may want to know how much of the profit have they made. Are they reinvesting? If they are not reinvesting, then you don't want to get into those stocks. Then price stability, because these are most important. Dividend stocks, if you want to know how their price moves, they have slow movement. You may find prices are not fluctuating a lot. And most of these stocks, they're usually expensive. So the spreads difference in pricing may not be that high. Then they have fewer big drops. So you find even if there is a price drop, it's not that frequent. It drops, then prices are the same or near same margin, and doesn't double very fast. You may find the prices are not doubling that fast. That's why you see most of these are expensive stocks. They don't flash fast. For capital gains stocks, they have big price swings. Today price is very low, then after a week, after an announcement, price swings up. So you want to buy when it's low, sell high. And they are usually moved by news. A small news will move the price and can double for by 50%. These are the ones which, in most cases, they are bullish in the market and bearish. Bullish price moves up quickly, bearish price moves down. So then when to buy for dividend? If you want regular income without selling shares. So you have invested, you don't want to sell shares, but you're receiving stable income. Then when you want stability, you don't want to keep on chasing price movement. And you prefer low risk. You don't want to get into shares that you can easily lose when prices go down. Then you want to invest dividend. Or if you're looking for capital growth, capital gains, you want price growth because you are chasing after price. So you may need to be able to handle volatility. When prices fluctuate downward, you don't panic. When they fluctuate upward, you don't panic and start selling. You want to identify opportunities, and that's when you take profit and also buy back. And these are preferred by high risk takers. And they are the ones who get high risk. through capital gains, and you are okay without no dividend. You don't worry if the share pays dividend and you have sold, you don't worry. Because immediately you sell, you lose the dividend. And with that, I would like to thank you so much. Let's look at the live session and we'll go into details. And we are now on Facebook, both page and group. Group is where I want structured discussion. I don't want a group where we are all over boosting everything. I want a structured way where you can be able to follow discussions within the group. So if you find you're not able to post, you can always reply, because replies is within a post, so you can be able to discuss things that are related to the market, not just anything, things that will help others. I'm also on Twitter, TikTok. I have completed Discord channel. The link will be in this in the description of this video. I'll also share on the active social medias so that you can join there. Also, again, structured discussions on various products that are available for investment. I'm also on LinkedIn, Instagram, Threads. Those ones I've just started, so you may find there's few postings, but they will improve as we go on. On YouTube, my channel is already active. Blog is already active with a lot of blog posts. WhatsApp community and the new channel. I discontinued the other channel. I have a new channel for reasons best known to the admins. We got reported on the other channel, and for some reasons I didn't want to lose the WhatsApp, so that's why I discontinued that channel and created now with proper guidelines. So the channel is there. Community is active. If you're on WhatsApp web, you can always reply to any comments. So there we also be discussing and more coming soon. So WhatsApp community, YouTube community, blog. There is also Discord and Facebook group. There we can have structured discussion. And all of them are under My Wealth Guide KE. Make sure it is My Wealth Guide KE. All of them, they are under my company, Intersection Trading. If the channel is not affiliated with anyone, if you are trading with any broker, you can come and consume information on my channel and use it wherever you are. And you can always consult if you need any assistance. Let's meet in the next one. And my name's again Peter Chege. That's my WhatsApp number. Let's meet in the next one. Thank you.